Thanks, Joe. Appreciate the kind introduction. Before I go any further, can everybody just give me a Y in the chat box that you can hear my voice and see the screen? I just want to make sure that everybody's got a good connection and we're loud and clear. Thank you. Aaron, Avinash, glad to have you guys in here. Joe, Billy, tons of you guys in here. There's so many traders in here on these big speaker events that I do appreciate the attendance. And thanks to Joe and his team for putting this on. It's always great to be around a panelist of experts in the space. It's always nice to have other speakers that have a lot of experience in different trading avenues. So hopefully you guys are getting a lot out of it. My goal here today is quite simple. I've got some specific topics that I need to discuss. As always, the way I like to present is based off of an educational format. More importantly, I like to get right into the charts and do some examples. But before I go any further, I just think it's important that if anybody's new here that's never heard of NeuroStreet or myself or our instructors, just take a look over to our website, neurostreet.com. And ultimately, you'll be able to, browse through the site and get a feel. We are a trading school. We run several trading rooms with different strategies, different systems. And just to kind of give you a little bit of credibility before we go any further, our two moderators that run our full-time trading rooms, we post our trade room performance on the website. Here's our market profile room. If you're interested in the broker verified performance, all the broker statements are down here, which adds the credibility for what you're looking for. We also have a scalping room that runs supply and demand and order flow. All of the details for everything are down here as well, so you can go in here. And the reason we do this is because, in our space, performance is the #1 kicker. Right, a lot of traders want to learn how to trade, but more importantly, if you can't follow people that are really successful at what they're talking about, it's really difficult for people to build a trusting relationship with those environments, right? So that being said, let's kind of jump in here and let's get on topic. I think it's really important that we get her done. And today what we're going to be doing is we're going to be breaking down what we call as the golden fib system. And the reason I chose this for this presentation is because our GF system is actually used in both of our trade rooms. And so we use the Fibonacci system for market profile trading. We also use the Fibonacci system for scalping supply and demand and order flow. We have traders that use it for scalping, day trading, intra-swing trading, and also larger time frame trading as well, up to the daily levels. And it is available for Ninjatrader and TradeStation. In fact, it's nice to know that today we officially launched in the TradeStation environment. So those of you that are using the TradeStation brokerage or platform will have this available to you as well. And it just opens up another opportunity for those of you that are interested. Now, I need to cover a quick disclaimer because we are talking about performance. There are strategy examples, and we do have performance on our website. So please take a second to go over this. If you have any questions on the risk or regulations in the space, please let us know. We can definitely point you in the right direction. I like to follow an agenda. We've got a lot to discuss. It's important to break it down step by step. I'm going to explain Fibonacci Confluence and why it's so powerful. And if you're going to trade a strategy, it's not about the information, it's about why we trust it, right? It's kind of, over the years of building trading systems and developing software and running trading rooms and basically being the founder of a trading school, what I've found over the years is that we have all these great tools and resources at our exposure, but why would we pick something over another? I think that's the more important reason. We're going to talk about using an internal versus an external output, but more importantly, going over the actual system as a whole and what it is. The reason we call it a system is because it's literally a full-blown trading system that can be interjected or intertwined with other strategies. And it is a software application that basically has a complete user interface control. The only thing it's not doing is it's not executing your trades for you. It's not an automated system. So we're going to talk about that in a moment, and we're going to go into a deep dive on that. We will look at trade examples on some of the markets. I will show examples on the Ninja platform and the TradeStation platform. And because, and I haven't done this in a very long time, and I like to get the everybody likes to save money. Let's just get right down to it. If you're buying a car, you want a deal. You want to go to the grocery store, you're going to look for the discounts on the food. Everybody likes to save a bit of money. we have opened up the launch pricing for the software because we are opening into TradeStation. So we haven't opened up launch pricing on this product in a very long time. In fact, since we launched it for Ninja. And because we are doing a promo for the TradeStation release, anybody that is using Ninja or TradeStation will have the ability to save money on the discount. And I'll explain that at the end, but it's important that I let you know that there are a huge savings to this. And we reserved it for this audience because it is a multi-speaker event. So that being said, Michael, head of order flow and supply and demand room, myself, Sean, and Raul, we are the master instructors for the school. I am the chief architect for all system design and software education. And then Ashley and Ben on the back end for support, marketing, and sales. So at any time, we have an open door policy. If you're new to our environment, or you're new to NeuroStreet, or you've never heard of us, or you want to get in touch with us, send us an email. We can jump on a call. We can shoot an email back and forth. We're very open and we're very flexible for communication. Now, this is trading software application. And what do I mean by that? This is not just an indicator. This is a full-blown trading system that is ultimately going to basically plan out trade entry, trade exit, stops, targets. More importantly, my job here is to explain why we would want to use something like this. Because it's not just used in one of our rooms, it's used in both of our trading rooms. And there's a reason for that. Okay, let's talk about what Fibonacci is. For those of you that are new to trading, you've probably just started hearing about Fibonacci. For those of you that have been around for a while, this is definitely no term that is unknown. But it's a mathematical sequence, and it's known as the golden ratio. Now, the reason why Fibonacci is so powerful, just like the reason why volume is so powerful, is because it's a constant in the market. Math is a constant in the market. You will never get away from the mathematics of the market. That's why any system or strategy that's based off math, volatility, or volume, or order flow normally supersedes everything else that is lagging, because math is not lagging, math is math. And this is important. So my background is statistics and finance. My head educator, Raul from Market Profile, he's got an engineering degree, and he's a mechanical engineer. We come from a math background. And so anybody in here that likes to trade anything that is forecasted in advance, this is exactly why Fibonacci Confluence can be so powerful, because my job is to teach you how to plan things in advance. If you're not able to take a trade in advance, it's going to be very difficult for you to assess your risk, assess your execution plan, assess why you're taking a trade, why you trust that trade, how we can measure the effectiveness of the strategy longer term for testing, either back testing or forward testing. Leading analysis gives you that ability to do that. Now, the reason why we call it Fibonacci Confluence is we use a multi-time frame as well as a multi-level confluence algorithm. So what we're doing is we're not just looking at one measurement of Fibonacci, we're looking at a collective sum of a whole bunch of Fibonacci information. And that's why we're not just trading a retracement, or we're not just trading an extension. I'm going to explain what this means once we get into the charts and into the platform. Now, the reason this is extremely efficient is because support and resistance is dynamic. Fibonacci is dynamic. Math changes because price changes. The market's always moving. It's never the same day twice. So if your strategy is a fixed parameter that is not auto-adapting to the market, it's going to be very difficult to adapt to the system or to adapt to the volatility of that instrument. And the goal of the strategy and the goal of the software UI, if you will, is to essentially produce the strongest levels to take trades off of. We can have environments where systems or setups or indicators can produce information at any given time. But what ends up happening is that, we need to be able to sort through the rubbish, if you will. We need to be able to say, okay, this is a high probability trade versus a lower probability trade. Or this is a strategy that produces weak signals versus strong signals, right? And that's exactly what we're going to do. We're going to show you how that's actually quantifiably produced, okay? So when I say big things like quantifiably produced, I want to explain what we're doing here. We look at measurements like zigzag analysis. We look at swing highs and lows. We look at retracements. We look at expansions. We look at projections. We look at measured moves. We look at alternates and extensions. And the problem with this is that if we were to take a chart and draw all of this on our chart at any given time, okay, what'll end up happening is it'll be next to impossible to take trades. You won't be able to make sense of the data. It'll be very, very difficult for us to be able to trade that information. And this is an example of what that might even look like. Like, this is an internal algorithm that is plotting every single level that is measured off of this chart in this time frame. It's an old image, but it's still relevant. And what I'll do is I'll give you an example. I'll give you an example of how this would look. I'm just going to pull a chart up for a second, and it really doesn't matter the instrument. I can just pull up crude, or actually I'm going to pull a different instrument. And the reason I want to share with you why this is important, okay, and I'll just pull a 5-minute chart just for the sake of keeping it simple. And I'm just going to load a 5-minute chart of crude oil, okay? Now, if I were to take a Fibonacci tool and measure Fibonacci retracements, I'm going to stay in draw mode. Stay in draw mode. Give me 1 sec here. Stay in draw mode. There we go. So if I go here and I measure this swing, and I measure that swing, and I measure this swing, and I go here, here's the thing, okay? I'm measuring every single swing in the market, and this is just the retracement. So let's go over here to the extension. There it is. I'm measuring every single swing. I'm measuring everything in the market. There's that swing, there's that swing, there's that swing. You can kind of see how complicated this could be. There's the Fibonacci extensions right there, okay? Now let me kind of go into the Fibonacci time extensions, right? So if I were to measure that time to that time, like, can you guys start to get a headache? Tell me you guys aren't getting a headache. I'm getting a headache, right? This is why you can't just take indicators and start putting them on your charts and expect the mathematics to line up. Now, why is this important? Because this is exactly the purpose of the Fibonacci Confluence software. We take all the mathematical data from Fibonacci measurements, if you will, which we explained here, which is 6 measurements, the most powerful 6 Fibonacci measurements. We look at the internal data, and then we basically map out the strongest levels where all 6 of these come together at a given time. So why is this important? Because this resistance level right here is 6 Fibonacci confluence levels coming together at that same price level. Same with here. Same with here. This is 6 levels of Fibonacci data coming together. So when I ask you the magic question is, why would you trust support and resistance to hold? Because anybody can draw support and resistance levels on a chart. Anybody can do that. A monkey can grab a pencil, take a draw tool, and say, I think that's support or resistance. Mathematically, that's difficult to prove out. Mathematically, what we've been able to do is we've been able to take 6 measurements of the most strongest measures of Fibonacci, which every single trader has in every single platform and every single trader knows about that has any experience, and we translate them into an environment where we extract the math and we take only the most 6 confluence areas where they all come together. So this is extensions, projections, measured moves, this is retracements, this is the cycles, this is all of them, the zigzags, all 6 of them line up here. Does everybody understand where that could be quite effective if we understand how to use it in an appropriate manner? Give me a Y if that kind of makes sense to you guys. Give me a yes if everybody's following along, because I want to make sure that I haven't lost you. Gerald says yes. Benu, Michael, okay. So I forgot to ask the golden question. The golden question is, who in here is a day trader? Who in here is a swing trader? Who in here is an investor? If you're a day trader, type a D. If you're a swing trader, type an S. If you're an investor, type an I. I want to know who you are. I want to know exactly where your focus is. Okay, we got a bunch of day traders in here, a couple swing traders, more day traders than not right now. I moving to swing, in case you're an investor moving to swing, couple day traders. Hey, TJ, yeah. So the reason I ask this question is it doesn't matter. The software can be applied across all markets, all time frames up to the daily charts. Over and above daily, it's very difficult for us to measure micro swing analysis. And you could pretty much argue the fact that you could use the daily or just slightly less than the daily to take really strong levels, and we're going to show you that. Now I want to map out what we're going to do from a system overview perspective, because I'd like to get into the software. I'd like to show you examples, and I'd like to explain how to use the software for trading opportunities. It is a Fibonacci Confluence indicator, so you can use it as an indicator. But more importantly, it's a semi-automated Fibonacci system. It's a semi-auto trade planner. It's a semi-auto risk planner. And it's automatically adjusting to dynamic volatility and Fibonacci detection. Now, the core foundation of the system uses what we call as Fibonacci confluence levels, which we just explained. But more importantly, it measures the average true range of each market's independence outside of the time frames that you're trading. So what do I mean by that? Well, if you're trading crude oil on a 5-minute chart, or if you're trading, the NASDAQ on a 6-tick range bar, the system automatically adapts to the time frame and the market that you're trading it to as soon as you apply it to the chart. Because each market has different movement, different volatility, and different swing and market structure with mathematical fib detection. So to keep it simple, it's automatically adjusting to your markets and time frames on the fly. Okay? Now, I'll give you an example of what this looks like. We've built a master control drop-down that allows you to completely control the support and resistance levels for taking trades. What it does is it basically maps out your buy zones, it maps out your sell zones, and it basically plots your stops, your targets, your entry, and your volatility assessment all on the chart. So this is an example of a long setup where you would actually see a support level from the fibs, and you'd be able to plan your entry, your stop, and your targets all based off the settings in the drop-down. This is an example of a short just reversed on a market, and basically you can see that it's just turning the shorts on versus the long. So that's a long setup. This is a short setup. Okay. Now, I like to spend time on the charts. I want to go into the markets. I want to go in and show you some examples. For those of you that are interested, if you can't stick around for the entire presentation, I'm going to put a link in the chat box here right now, and I'm going to put this to all attendees. And there's a link that will give you a breakdown of the software. If you want to go and watch that later, you can. Now, let's go in here, and I'm going to clean this up because that's obviously not effective for information. So I'm going to just mention that what you're seeing here is I've got 4 charts of Ninjatrader. Okay, I've got 4 charts of Ninja, and for those of you that are not using Ninja, and maybe you're using TradeStation, I've also got 2 charts for TradeStation. So depending on the platforms that you're available for, we've made the software and system compatible for both of these platforms. So I'm going to use Ninja first because ultimately it was originally designed on Ninja, and this has been my primary platform, but we're going to go over to TradeStation. We'll do a demo on that as well. Great question. Carrie's asking about other platforms like Thinkorswim and other stuff. The thing about our software, and just so you understand our brand as a company, NeuroStreet designs very high-end software. So the goal of our brand and the goal of our platforms is we require specific code language in order for us to do the algorithm detections that we do. It's very difficult to do coding for what we use for our indicators on some of the other platforms. We need specific code language in order for us to code it. It's just that our software and systems are more advanced in terms of the functionality, the UIs, the drop downs, the customization, and a lot of times the algorithms that we build are not even available on certain platforms, and they probably will never be available because they're just very complex internally to code. Okay, so I don't want to get too techy. I want to stay on why would you use this and why is the solution viable, and then we'll get into that in a moment. So crude oil, we've got crude oil, we've got the euro, we've got gold, and we've got the NASDAQ. I'd argue that these are 4 of the most heavily traded primary futures markets in the space. If you're not a futures trader, you're a stock trader, I could connect to a data feed and we could look at stocks, or if you're a Forex trader, we could look at Forex. It will work on all of it. But what I'd like to do is I'd like to just, I'll just take an example of let's just take the euro on this Renko chart for a second, okay? And I'm just going to turn things off for a second. So I'm going to go here to, it says long trades on, short trades on, and near trades off, far trades off. Okay, so I'm going to turn everything off for a second. And I'm just going to look at this for a moment. And you may not trade the euro on a Renko bar, right? You may not trade gold, or you might trade. But the whole point of this discussion is that we have the ability to see in advance. Now, remember I said earlier that each one of these measures Fibonacci confluence. I'm just going to put a number 6 beside it. Okay, I'm going to put a 6 beside this. Okay, and the reason is every time we see a level of support or resistance, I want you to think 6 fib levels are coming together at the same time. Okay. I also want to talk a little bit about when do we buy support and when do we sell resistance. Well, that's a really great question because it really depends on if you're a directional or a non-directional trader. So if you're a counter trend trader, well then you'll be trading counter trend. If you're a trend trader, well then you'll be trading trend or momentum or direction. We can easily see that let's just draw a little line in the sand right here, that if you were a day trader trading the euro right now, you know, then technically the direction will be down. We're making lower lows and lower highs right now. So the goal would be, if you're a directional trader, you'd be looking to sell resistance, right? Well, in this environment, we'd be looking to sell fib levels. So we turn the system on, and I would put dominant trade plan to short, and then I would turn short plans on, and then I would turn near and far plans on. Because technically, and I would prefer to actually go and turn the far plan on, and I'd actually like to just do this, like that. Or even better yet, more like this. Okay, and what's interesting is you have the ability, okay, and normally what you do with Renko charts is you would wait for the bar to flip or reverse. You don't take levels where price is coming into it. You would wait for the reversal. So there's be the reversal, and essentially you would look to take the trade-off resistance with your stop level here. I'm going to give you an example of crude oil because I think it's really good to show you crude oil right now, and I'm going to go into crude for a second and talk a little bit about what's taking place here. Let me give you these examples. Okay, I'm going to go into the indicator and we're going to change the fib settings to basically look at the levels in which we can produce. If you go into the software and you basically say, okay, I have the swing timer. If I go to smallest and I hit apply, I'm going to have more levels on my chart. Okay, if I switch to largest, I'm only taking the largest swing levels that this indicator produces. And it's because we're taking a look at the bigger swings, right? If I go in and I take a look at the small, let's just set it to small, okay? And I do this. We should have a pretty accurate read of the support and resistance levels that the market is reacting off of. And you can actually adjust the software to see that. Like if you just take a look here and I turn everything off, okay? And I turn all the plans off for a second, I can see that price is responding well to these levels. So I would know that the software has been set accordingly. If you're somebody that's trading high time frames or small time frames, I encourage you, the user, to go in, and the only thing that ever needs to be changed in this indicator or this system is basically the swing time frame. Everything else is automatically adaptive. The swing time frame is normally something that we would adjust based off the market and the time frame that you're trading, because every market moves slightly different. Okay? Now, I'm going to basically just go right here for a second. Okay, let's just start here. I'm going to go, this is this morning on crude oil, and this is a 2500 volume chart. It's about the equivalent to a 5-minute time frame. I like the way volume charts look as opposed to time, but ultimately it's up to you as a preference. And we can see that directionally we took out structure right there or right there, right? We broke the lows. So the sellers were controlling this market. So if you're a directional trader, you'd be looking to sell resistance. Well, this level of resistance right here is 6 measurements of Fibonacci. But what's not being showed here, what's not being explained, is that every support and resistance level in the market, whether you draw it or not, has what we call a factor of average true range. And this is equally important to trend lines. So let's say if I drew a trend like this, right? And you drew a trend line like that, there's a volatility factor that you probably don't know that mathematically is happening. When you see a structure reversal like this and it breaks a structure, if you've ever seen it come back to retest, sometimes it comes all the way back and sometimes it comes a little bit back and then takes off. Why do you think it stops right there? It's because it's mathematically, there's an ATR around every support and resistance. And the reason we look at ATR is because it's basically a measure of volatility. So if I add the average true range to this chart right now, okay, and I basically just, I could do that. I'll just show you what I mean by this. If I go into this indicator and I just add a standard average true range indicator to the chart, okay, just like that, I can tell you right now the average true range for crude oil on this time frame is 12 ticks. So what I'm thinking subconsciously is that at every level of support and resistance that is in the market, there's a level of resistance right here, there's a level of resistance right here, there's a level of support right here. I'm just going at it from a new trader's perspective. There's a level of support right there. So every support and resistance level that I see in the market, mathematically, we got to be thinking that there's 12 ticks of ATR around this, that if the market comes up to it, it could overshoot it by 12 ticks. If the market comes down to support, it could overshoot it by 12 ticks. We got to think of, when we get to key areas of every level in which traders could be taking trades, the math is we need to think about the market's likelihood of hitting the stop losses or blowing through those levels. So if you've ever taken a trade and you're like, man, I'm taking this level, and then it gives you heat and then it works, the reason it's giving you heat is because the volatility of the market is adjusting to those levels. And that's what quants do. So if you look at quant programmers or you look at algorithmic trading systems, you got to think about why a strategy works, why it doesn't, what it's doing, what the market's doing, and that's where engineering and math come into play. Now, to a new trader who just wants to make money, that's why I'm here, because we do all the hard lifting. We basically think about all this stuff when we design the software algorithms, and my job is to show you where and when to buy and sell so you can do so effectively. Okay, and that's exactly what I'm about to do here. I'm going to show you that if we just take the system and we turn it on and we turn short plan to dominant because the market's going down, I'm thinking shorting. If I just turn the short trades on, okay, and if I turn all the stops and targets, I can just sit there and there's my entry box. That's my zone. That's a half of a factor of ATR. So if I turn this to fib price or mid price, I'm going to just recalculate this. You're going to see that that entry is going to be in the middle of the zone. So depending on whether you want to cut your stop loss in half or not, the goal would be to enter around this area. Okay. Now, if I go back a little bit, you're going to see that it never quite got there on that environment. Let's watch it. What about right there? You can see that price came right up to that zone. Now, you're probably wondering, why is this zone being plotted here? Right? Why is that zone there? Well, it's because that's a factor of average range. So what we're doing is we're taking the volatility of the fib levels and we're giving you a breakdown of this market's volatility so that when we get up to these buffer zones, there's your entry right there, because it's coming into that fib level at the buffer zone. Now, if I want to plan the stops and targets, I just go in here, I turn my stop loss on, my T1, my T2, and that's all based off this money management plan down here. So you can sit there and you can change the money management plan to be based off average range, which we recommend from an advanced perspective because volatility-based levels are much more effective than, say, just you picking random stops and targets. But if you want to switch it to ticks, you could. Okay, it just depends on your preference. But you can see exactly why this buffer zone is here. is because we're already doing that without you having to draw all that stuff on your charts. You don't need to be thinking about the ATR. You don't need to be thinking about that. You need to just know why the system was built this way. And if we take a look at how the market reacted off that level, it came back in again for a re-entry, and then it came back down again. Now that's just one trade opportunity, right? You're probably wondering, well, how do I know I want to take that trade versus the next? Well, if you're a counter trend trader and you see the market coming down into support, you would just turn longs on, and I'm going to turn shorts on, longs on. Right here, just turn the long plan on. And as price came down into this level, you can see price came down into that support level. There it is. There's the entry. There's the targets. So it really depends on you deciding, are you a directional versus a non-directional trader? Because it really has to do with your persona and how you choose to trade. Because I can show you right now, there's going to be counter trend setups and there's going to be directional setups all times. You're always going to either be in a directional or non-directional market. There's never two states where it's not. And so that's why I'm here, because I'm here to show you that this type of analysis is used in both of our trading rooms. So depending on the core strategy that's being taught, the fib levels are used in both of our market profile rooms and our supply and demand and order flow scalping programs, because they're completely universal and they actually impact in a positive way all of the strategies that we trade. Some traders trade the fibs for extra confluence on the levels that they take, and some traders literally just trade the fib levels by themselves as a standalone system. And so it really just depends on how you choose to trade it. I'll give you an example of what it looks like on this environment. Now what's interesting, as if you take a look at this, is a delayed data feed. So if you're wondering why the NASDAQ hasn't adapted yet, this is a delayed data feed, right? Well, if you take a look here how this market was reacting, okay, you can see that the market was in an uptrend here, but coming down into this support level, we technically broke structure. So if you're a directional trader, you would not be buying this support level right now because you're breaking structure going into it. Okay, if you take a look here, price came down. We took out the lows on this candle, so price came into resistance right here. That system would have had a sell zone right there. We would have had another re-entry to get the level right there because we would have had a buffer zone right here, right? Price came down and broke the level right here. And where we would stop basically taking trades short would be right here. We would stop trading the market short because we took out the highs and we broke. We would switch to a long bias depending on if you were a directional or non-directional trader. So the reason I map this out this way is because I don't really know, and most traders in here have their own markets, right? So you might be an options trader who wants to apply this to a 4-hour chart, right? You might be a scalper who wants to apply this to crude oil on a 4-tick bar. You might be a market profile trader trading 30-minute profile levels using the fibs for extra confluence on your value area high and value area low levels. The benefit of using the fib system is that you can use the measurements of the algorithms on 6 measurements of fibs to line up with every single other strategy you're taking, or you could trade it as a standalone system. And that's why it's such a powerful add-on, because it's not just an indicator, it's a trading system on its own if you choose to trade that way. Now, if you're somebody that likes to see things demonstrated, or you like to see it in action, then, well, that's why we have trading rooms, right? We have trade rooms that run these algorithms inside of it. Well, Carrie, it's interesting is because I don't just trade it by myself. So Carrie's asking great questions. You haven't traded yet, or what about Thinkorswim? What about options? Well, options, and I'll go into these questions because Carrie's asking some great questions. If you're an options trader, you're using these levels to plan entry, but then you're just using options to place trades around those levels. So when you trade options, you're making a decision to buy or sell, and then you're using options as a vehicle to do that, right? Normally people will trade options once they learn the movement of the stock or they understand the volatility of a market. When you say what is the winning rate of the system, well, it's really dependent on what market or strategy you're trading it with, right? We don't just trade fib levels by themselves, but we do have a lot of traders that do, right? Our trading rooms run the fib levels in conjunction with all of the other trading systems that we trade. So it really just depends on you as a trader, right? It really depends on you as a trader who wants to use it to your advantage. You might use it as an independent system, or you might use it with other strategies, okay? So let's kind of go in here for a second, right? And look at opportunity. If I'm going to look at, you know, let's say the NASDAQ on a 5-minute chart, okay? Let's go in here right now. And I'm looking at, you know, this level that came in here. Well, this is a counter trend level, right? This is a counter trend level. If you're a counter trend trader, okay, you could look at shorting resistance, and I would just basically take out the long plans, okay, and use that. Now, I don't think that if I, and here's the fun part. This is the fun part for me. I always try to put myself in your position. I have been building trading systems for years. I've been developing software with instructors and running trade rooms for years. But I'm not you, I'm me. So when I look at, you know, if I'm a new trader, I've got webinar to attend, I've got trade room to try out, I've got indicator to test drive, I've got platform to experiment with, I've got all this information coming at me. And if I can leave with probably the most important thing that I could ever teach a trader in terms of how do I find what it is I'm best suited to do, I'm going to just grab a chart for a second and I'm going to explain a very important concept. I'm going to grab crude oil because it's probably one of the most important markets that everybody trades. I'm going to put a 30-minute time frame on here. Okay, just to keep it real simple. You know, you could be a discretionary trader who draws support and resistance lines. Okay, you might be that guy that draws these levels out. Okay, and then you do this or you do that. You might be the guy that you know, you go in and you want to draw a market profile. Okay, so you want to do volume profile. Let's say you're that guy that wants to use volume profile levels. Okay, and you know, you might be that guy that wants to use volume profiling. You also might be that guy that wants to use order flow, or maybe you're that guy that wants to draw a trend line, right? Whatever way you're used to thinking, or maybe you want. I got a guy in here right now saying, maybe you want to add Bollinger Bands. Here's the thing, right? They're all different ways to trade, and the question that everybody asks is, which one should I choose? Which one should I use? Which one should I do? And my argument to that is, how is it different and how is it more effective? Because anybody can put an average on a chart, anybody can draw a line on a chart, anybody can make an opinion about a market, but that doesn't really give you an edge. It's really just rudimentary lagging data that everybody in the entire world can see and any professional trader can trade against. So the reason why the success rate of traders is really stacked against the newbie is because if you're doing what everybody's doing, most likely you're losing money. So you got to think outside the box a little bit as to how can I stack the chips in my favor? What could I be using that is completely not available to the random person? Meaning, if I'm going to use something, am I able to do this physically myself? And there is no physical way that you as an individual trader can mathematically calculate multiple time frame 6 Fibonacci confluence levels and be able to plot them on your chart to be able to give you a statistical advantage. It's mathematically impossible. I know that because it takes 7,000 lines of code to plan the algorithm. Now, to do that is why we have these events, because I want to give you a reason to trust support and resistance levels using fib levels instead of just drawing them or randomly just drawing a retracement. Because I could draw a retracement here and we can see that it came up to the 50, but you're still subjectively there having to draw those lines. And you're subjectively there having to make those decisions. And the problem with that is there's a huge element of error that we put in as a human. And that's why computers are leveraged in today's trading space, is so that they can do the hard work for us. Does that kind of make sense? Because you can use it in conjunction with whatever indicators you're using, or you could use it as a standalone system. if I were to basically put an average on here, I'm just going to just real keep it super simple, right? I'm going to just put a Bollinger Bands on here, because I really think it's important that we keep it simple here. Bollinger Bands. I'm going to put the Bollinger Bands on here, okay? Now, you might say, I'm going to just short the mid band on the Bollinger Band. I'm a directional trader. I want to take the short. Let's just turn this on here for a second. Turn it to shorts. Long plans on, short plans off. Let's say you were planning on shorting that Bollinger Band. And I'm using Vincenzo as an example because he just put this in here. Let's say you're using a Bollinger Band. Well, this is where you have confluence. You have confluence of data. Now, what gives you a bigger advantage? A 20-period average that everybody in the entire world and their dog is looking at, or the fact that it's lining up with an algorithm that is completely impossible for the human to do on their own. The fact that you have confluence of data makes it super powerful. The fact that you have confluence of data where these fib levels are lining up at the outer lines of standard deviation, that's an edge that can be exploited. Trading pullbacks where there's confluence between an algorithm that you're not able to do on your own versus using standard tools that are available to you. Or even adding, let's say, an RSI or a CCI or a MACD on the chart, which is what everybody starts with, but then ends up learning that if I'm going to be really successful, I need an edge. And that edge needs to be quantifiably different than what 95% of everybody else is using. And that's exactly why we design high-end products that are mathematical algorithms, is so that you can take whatever indicators you're using as a trader and merge them with really, quantifiable data. Right? So when you see things lining up like this, it's a huge opportunity. Now, I personally can't trust stuff. I've just been in the space designing software for so many years. I can't trust things that everybody else is using on a basic level. I just know that there's so much more to the markets than that, from a math perspective and from an edge perspective. That's why I design these tools. But more importantly, it's how can you actually trade them to make money, right? And that's the reason why we're here, is to be able to show you that it really just depends on you as a trader. And I really encourage you to come in and take a look at what we do in terms of NeuroStreet as a trading school, because you're going to see the fibs being used in both rooms for both market profile and scalping. So it really depends on your style. Okay, so what I'm going to do is I'm going to sum this up and just give us a summary of how this can be dealt with. It's an indicator on its own, but it's also a fully fledged trading system. It plans your trades, it plans your risk, and it also plans the dynamic volatility of the market, okay? And so the reason I break it down like this is because I personally, as an instructor, don't know what you're trading off of unless you're in our community. Right? But the question is it transferable to everybody? And the answer is yes. It's just about making sure it's applied to your product and your time frame. Okay? So a couple things here I want to point out in terms of what's available to you whenever you invest in software and strategies with NeuroStreet. When you become a member of our products and services, you end up getting basically access to a members area, which gives you user documentation, and it also gives you training videos and all that types of stuff, right? So when you become a member, you'll be able to log in, you'll be able to have training, you'll be able to have all of that stuff provided if you're a TradeStation user. If you're a Ninjatrader user, let me just go into the Ninjatrader space here. Let me just pull up the GS system, because it really depends on if you're using TradeStation or if you're using Ninja, because it depends on the platform that you're using. If you're not using one of these platforms, then you can either download a simulated environment and execute on your platform. It just depends on what you're using. But more importantly, it just depends on, what you decide to trade off of. We've got licensing instructions, user documentation, training videos. You're not just sitting there getting something put on your screen. We also have a support team who will log onto your computer and will help you set it up. So if you have any questions, there's an installation instructions and so forth. But if you need help or you like a done for you service, we can do that for you too. We have an in-house guy that does that full time. Okay, so I want to thank you guys for being here. I'm going to basically give you a breakdown of what this is. The system and the software retails for $19.97 for 2 licenses. So if you're using a main computer and a backup computer, you're going to get email, lifetime phone support, all of that stuff, comprehensive user manuals and data and application. But more importantly, because we're doing the launch on TradeStation, we're giving a $500 drop off the cost. And this is a launch pricing been reopened, and I'm going to put the links in the actual in the chat box here so you guys have them to your advantage, because for those of you that are interested, this is there for you. Okay, and for those of you that have questions or would like to speak to an account manager, just so you guys know that NeuroStreet has a team of traders. Because we are a trading school, we have a team of traders that were once users of our software that now represent us and work with all of our traders. The reason for that is because we want traders helping traders. That's the motto we have. We have traders that are very efficient with what we do, and they are the people that work with all of our customers. So if you have any questions, we're not just here to sell you a course or not just here to sell you a tool. Like, we're a trading school that runs fully fledged trade rooms with performance verified track records. So the difference is that we want you to be in an environment that promotes a healthy learning environment. We also want you to be using tools that people are using very successfully. Okay, and so hopefully you guys found that informative. With the time constraints of these multi-speaker events, so I want to give everybody a chance to speak and ask questions. Joe, I want to thank you for being here, and Mark, thank you for allowing me to take some time. Hopefully I didn't go too over, and if you have any questions or you need any assistance with our team, sales@neurostreet.com, and we can definitely get you in the right direction. So thanks for letting me be here, guys, and thanks for letting me present.